Good morning, everyone. My name is Elizabeth Charles. I am an outreach and marketing specialist for the Small Business Administration's Houston District Office, your local district office. And if you are looking at your agendas, I do not look like Winston LeBay because he is not currently in town. So I am going to try my very hardest to do an amazing job just like I know he would, so I could make him proud, all right? You are in for a wonderful discussion today. How many of you guys are ready for this panel? Awesome. I need y'all to bring as much energy to this as I am. I am hyped up on 3 cups of coffee if you cannot tell. So today we have a wonderful group of panelists here for us to be able to talk to you all things access to capital, all right? So I am not going to take up their time. I am going to start this panel discussion. We will have a couple of minutes at the end of our discussion for some questions and answers. So we will allow for that to happen from the audience. But for now, I've got the questions and I hope our panelists have the answers. All right, so we're going to start at the far end. Please introduce yourself and who are you representing today?
Testing. Good morning, everyone. My name is Brandi Pitre. I am the Business Development Officer at ACU of Texas. We are a full-service credit union servicing a variety of products and services for consumer and small business banking. Happy to share that we are a 75-year-old credit union, and we are located in surrounding counties within the Gulf Coast region. Very excited to be here and happy to be a resource.
Thank you, Brandi.
Hi, many of you guys know me already. My name is Wendy Ghormley. I've been in banking in this area since 2005. I'm actually currently with Live Oak Bank. Our headquarters is in Wilmington, North Carolina, but I still work down here. I'm happy to help.
Thank you, Wendy.
My name is Jennifer Dale. I am here representing LiftFund, which is a community development financial institution, so an alternative lender. And I've been with the company for about 13 years, and we cover 61 counties along the eastern side of Texas out of our office.
Yeah, I'll be safe and use this one. Can y'all hear me okay? Stephen Maxwell, Senior Vice President at Frost Bank, located here in downtown Galveston. I've been with the bank for about 15 years. Oversee commercial lending here in this market. I won't go into too much detail about the bank. I'll just tell you we're based out of San Antonio. We're over 150 years old, and we have a presence in every major metropolitan area in the state. So look forward to it.
Awesome. We look forward to this conversation. Can we just get a wonderful big round of applause for our panelists before we start? And so before we get into the conversation, I want to go ahead and address the elephant. The question that we always get whenever we have a panel discussion up here is, how can I get the contact information for every one of these panelists, right? So if you find this discussion to be intriguing and you want to find out more information, many of these panelists will be available after for questions as well, but also keep in mind that Amy Reed from the Galveston County Small Business Development Center will be happy to take your information so that she can send you the contact information. So just keeping that in mind, all right? So let's get this conversation started with one of my favorite questions. We're gonna go ahead and start off here with Stephen. What are some of the common misconceptions that small business owners have about obtaining capital?
Can you hear me okay? Yeah. Okay, sorry about that. I would say the biggest misconception is the importance of the character of the borrower. And what I mean by that is, all small business owners should work with their banker or their financial institution. And I would encourage you to start a relationship early on. And I would encourage you to cultivate that relationship the same way you would with another professional, like an accountant or an attorney, because they can bring value to that. And by starting that relationship early, not only do you improve your chances of getting access to the credit, but then also in the future, if things, heaven forbid, go south for the business, you have that relationship to fall back on. So I think the biggest or the most overlooked aspect is the relationship and the character aspect of it.
Thank you, Stephen. And I see a lot of nodding heads from the other panelists. Do any of you want to add anything to this? Do you see different misconceptions, maybe even the same ones? Something you'd like to elaborate? Jennifer, we'll start with you.
Yeah, I would just add that I think that there is a conception or a misconception at some times that lenders don't like to lend, that lenders are there to say no. And in reality, I think everybody on the panel would agree that we all get paid to make loans. So we want to do lending. We're all in this business because we believe in the power of investing in our communities and investing in small business. And it's not something to be afraid of when you go and talk to a lender. It's kind of like going and talking to a doctor. If you tell them what the situation is, then they're in a position to be able to help you. And I think that the misconception is that you have to kind of paint the best picture possible for your lender. And in reality, it should be that relationship, which involves a little bit of vulnerability as well. So that would be my input.
Awesome, thank you.
My answer is going to come out of left field. Character is always on the forefront of what we're looking for as a lender. I personally meet every one of my borrowers in person, even if it means jumping on a plane tomorrow before we close a loan. But for me, as an SBA lender and somebody that's been in SBA since 2005, I think there's a common misconception that SBA guarantee is a substitute for collateral and liquidity. It is not. So that's, for me, there's a lot of classes out there like Boots to Business and things like that where a lot of people go take classes on SBA lending, and they come to me and they think that because it's an SBA loan, they don't have to put any money down, there doesn't necessarily need to be any collateral, the cash flow doesn't have to be there. So the SBA guarantee is a crutch to entice banks to lend where they otherwise would not. It is not a complete substitution for cash flow, equity, skin in the game, and collateral.
Thank you so much for saying that. That is very much appreciated as well. We definitely hear that a lot on our end. So having that out there is also very, very beneficial. Brandi, did you want to add anything?
Yeah, I'm just going to tag on to what the other panelists said. Lack of resources is one misconception, in addition to where to start. You know, some small businesses, they're not really sure of where they need to go to access those resources. So establishing that banking relationship early on, as soon as you decide that you want to hop into a business endeavor, is very important. Not only is the banker going to hold your hand, but they want to see you succeed. We want to provide you with the access. We want to provide you with access to resources and tools that are going to help you to access that capital and grow your business.
And let's stay on that topic for just a minute. So access to resources, that's something that we definitely hear a lot as well. And for those of you who may not know, the Small Business Administration, we do have several resource partners out in the community that offer no-cost business counseling for you, whether you're starting that business, growing that business, expanding that business, or moving on, maybe exiting. All right, and so one of the things that we want you to know is that those resource partners are there. But one of the things that we hear, and I hear this so often, not only in this panel, but also, of course, right now. Brandi, we're going to start with you. You mentioned a key word, relationship. All right, so how important are relationships with bankers and financial institutions in this loan approval process? I'm trying to get a loan. How important is it for me to have a relationship with that lending institution?
Relationship is key because it's going to provide the lender, we'll be able to see the full picture of what it is that your business is trying to attain and achieve. Excuse me. But establishing that relationship also connects you to additional resources that banker may have. In the financial industry, bankers and lenders are connected with several referral partners that can assist you. If you don't have any experience with accounting or QuickBooks, they can point you in the right direction for that. If you need assistance with credit repair to make sure you are lender ready, they have resources available for that. So everything just kind of goes back down to establishing that relationship with your banker and lender.
Awesome, thank you.
For me, relationship comes into play because I don't offer everything. I am not a Frost Bank, I'm not a LiftFund, I'm not an ACU credit union. I actually complement these three folks up here, but I don't offer what they offer. So as a borrower, as a small business owner, you need to know multiple banks, because if you need equipment financing, I'm probably going to refer you to Steven. If you need a $35,000 disaster loan, I'm going to send you to LiftFund. If you have a need for some boat loans, I might send you to a credit union. Not that that's what you're focusing on, but that as an example. So you need to have as many relationships with as many different banks as possible, because while we may have similar policy, we might have a little bit of overlapping. We're not going to all offer the same thing.
Awesome, thank you, Wendy. Did you want to add anything, Jennifer? Okay, awesome. Well, I love that you guys made it about two-way streets as well. So it's not only about, the small business owner having a relationship with that lending institution, but that those lending institutions also have relationships outside of the arena that they help in as well. Because I love that that's something that you can help assist in building those connections for those small businesses. And, Wendy, you brought up a really good point. So just like you as a small business owner, just like you as an entrepreneur, you are like a fingerprint. And what that means is that you are different, you are unique, you are offering something that is different than your competitors. And it is the same exact thing with lending institutions. Not all of them are the same. Not all of them offer the same thing, all right? And so I would be remiss if I didn't add a shameless plug about how you can actually build those relationships. Our SBA Houston team, we have lender matchmaking events all the time where we invite lenders such as the ones you're hearing from today to be able to talk to you. We have access to capital panel discussions just like this, but also other events that are available to you to learn more about those lending institutions that are out there for you. But when we talk about them not all being the same, Jennifer, we're going to start with you, and then every one of you I want to hear from. What types of loan products are typically available through your lending institution? Tell us a little bit about those products that are available and what these small businesses need to know.
Sure thing. So, is this working? Yeah?
I hear it.
Okay. So as a community development financial institution, our institution is to complement the lending that happens at traditional institutions by reaching a little bit deeper into the communities and servicing the small business owners that on occasion don't qualify immediately for traditional financing. So we do that through education, through partnerships with chambers and with other local organizations. And we have our own internal education, but we also do it by extending guidelines. And because we've been at this for 30 years, we have figured out a way to work with companies that may be considered high risk with more traditional lending institutions. So whether that is because you're a startup business or because there is a little bit of a challenge with the credit or with the collateral, or we're just in a really unique situation and it's difficult for a larger lending institution to pivot in the case of a disaster or something along those lines. So we work with traditional lenders, but we reach just a little bit deeper into the community. An example of something that we do that I think we'll be talking about specific products probably later on, I think, but an example of something that we do is stepping in the case of a disaster. So trying to make sure that funding is quickly and readily available to businesses that are affected by natural disasters. Another big area for us is financing for startup companies and making sure that they have access to capital before they hit that kind of 2 to 3 year mark that a traditional lender might be looking for.
Thank you, and that again is LiftFund. So we're going to go on to Steven. Can you talk to us a little bit about Frost?
Yeah, so we are a full-service commercial bank, and just to simplify things, as a business owner, really when you think of debt, I would, at the most basic level, break it down into three.
Bring that up. Yeah.
Can you hear me okay now?
There you go.
Just gotta get real close.
Sorry about that. All right, at the most simple level, you can really break debt down into three categories. Term debt, revolving debt, and bridge financing. So without getting too much into the weeds, when you talk about term debt, typically you're talking about financing for long-term fixed assets. So think equipment, think real estate. That note typically is going to be what we call fully amortizing. So from day one, you're going to be paying principal and interest unless there's a construction component. Again, I'm not going to go too far into the weeds, but you have the term debt and then revolving debt. So think of a revolving line of credit. Typically, that will finance short-term assets. So think inventory, accounts receivable. You're trying to turn that working capital. And then the third type, without going too far into the weeds, would be bridge financing. So in bridge financing, just to kind of keep it close to home, if you have an insurance claim with the hurricane and you present that to the bank, you say, hey, in 180 days, I should get paid out on my claim. Well, the bank can then make you a loan based on that event happening, and then that would pay off the note. Or in other cases, there may be some type of takeout where you get longer term debt financing. So at a basic level, those are the three types of debt a business can take on. Now, banks will have, types of collateral they favor over others. They'll have different promos with interest rates, but at the end of the day, you're looking at term debt, revolving debt, and bridge financing. Those are the three basic types, and we offer all three.
Thank you, Stephen. Wendy, can you go ahead and elaborate for us what Live Oak Bank provides?
So we are very different than most banks because I don't feel like I work for a bank. I actually don't do lines of credit. I don't do startups. I don't do refinances. I don't do equipment leasing. So we primarily work with expansions. If you're an existing business moving into a new building, I'll do 100% financing. If you're trying to purchase a business and it's in a leasehold location, I'm a merger and acquisition lender first and foremost. My minimum loan size is $1 million. I'll go all the way up to $30 million. So I'm going to be looking at historical cash flow, and that's pretty much it. We're very good at what we do, but our scope is like a rifle, less like a shotgun. So for example, I have a roofing customer that I have banked on and off for 18 years. He called today on the way here. He said, I'm ready to revisit a line of credit again. And I said, sweetie, I can't do a line of credit, but I might give him to Stephen at Frost Bank because he can. Incidentally, I'd like to also pay LiftFund a quick compliment because years ago I had a really lovely child care facility come up to me and want an SBA loan. And because they had Christian connotations in the name of their business organization, they were not eligible for SBA. The woman was unwilling to change the name. Good for her for standing by what she believed in. I referred them to LiftFund. They were able to do a renovation loan for a child care that was serving underprivileged children and working with government receivable programs. So those are the kind of things where, one, your relationship with your banker is important, and our relationship with other bankers are important, because I might be able to finance the acquisition of a pet resort in a lease location with no collateral, but if somebody comes up to me and they want a line of credit, I'm going to send it to Stephen, or if something's ineligible from SBA, I'm going to send it to LiftFund. Not to say she's not amazing, because we've worked together a lot as well in the past, but I'm going to let her speak to her talents.
Yeah, let's hear her, Brandi.
So as far as the products that ACU offers, it's going to be similar to Frost Bank. As Stephen mentioned, we do offer term loans, lines of credit, secured, unsecured, auto loans, equipment financing if you're needing to purchase equipment, in addition to business credit cards as well.
Will you guys do startups?
We do startups. Okay, yeah, I was about to, thank you for asking that, because I was about to ask that same question. So a lot of the times, as you heard here, various banks, various different types of lending products, various different types of processes, right? And so I know when I used to be a business counselor, so when I would talk to small businesses, a lot of the times that information would get convoluted, they didn't really understand. So speaking to them about your case-to-case basis is always going to be beneficial. So one of the key questions that we would always get, and I want to start with Brandi. If you're noticing, there's a pattern here. So one of the key questions I want to ask you guys is, so what are the factors that you're considering when you're evaluating these small business loans? So I know you do offer to startups, and a lot of the times when these startups are coming to us, they're like, well, what is it that I should be considering? What are some of those factors that you're considering?
One thing that we are going to look at, we want to see your personal financials. If you are a new up-and-coming business, We want to make sure your financials are in alignment. We also want to make sure your credit DTI percentage is where it needs to be.
DTI.
DTI is going to be your debt to income ratio. That lets the lender know that your debt is not exceeding the amount of income that you're generating. So that plays a huge factor in the loan process. So making sure those two pieces are in alignment with each other is going to benefit you quite a bit in terms of loan application process.
Awesome, thank you. Wendy, do you want to elaborate on that? Some of the factors that your bank considers when looking at loans? Because I know, for example, you are not at that startup phase and they're for the expansion phase. So some of those businesses are already, well established. They have those things. What are some of the additional factors?
I'm going to try to keep this really short because I could be really long-winded. In my past life, I would say, don't come to me and say, how much of an SBA loan can I get? I can't tell you how much I hate hearing that. I'm sure these folks do too. In my life now, I'll tell you, if you're coming to me and you're asking me to give you $2 million to purchase a company, you better run the cash flow on your own, and you better know exactly why you want to buy that company. That's probably it for me.
I like it. It's straightforward. That was very straightforward. Answer for that. Jennifer, do you want to add anything?
Sure, we're going to focus on what we call the 5 C's of credit, which is something you'll hear often. It's an evaluation of your credit or your character to the point that Stephen made earlier. How have you handled your obligations in the past? It's kind of your foot in the door. Your capacity to repay the debt is going to be based on things like your debt to income ratio or how much surplus you have in your budget currently to take on an additional obligation. We are a collateral-based lender, so we will take at a minimum a blanket lien on the business assets. We can be extremely flexible with what we take. If this were our business, we would take the microphones and the water bottles and the table and the chairs. And I mean, we can be very flexible with what we take, but we do require collateral in all of our loans. And then we're gonna, if it is a startup business, we're gonna want some form of equity injection. And then the 5th C is something that we call conditions, which just means, is my business properly registered? Do I have the right kind of experience for this industry? Am I the right person to run this business? How have I documented that? And do I have the right people on the loan and those kinds of things? Is this the right time? Those kinds of details that are generally summarized in your business plan is what we're going to be taking a look at.
Awesome, thank you. Stephen, do you want to add anything?
She stole my answer.
I was thinking
That was a good answer.
Okay.
Super thorough.
No, I would just piggyback on top of that. When we talk about character, what are we talking about? We're talking about the tenure of the relationship with the business owner. We're talking about maybe the commercial credit scoring business, maybe the personal credit score. We want to know about the character of the person. Capacity to repay, Brandi mentioned DTI. Another metric would be what's called a debt service coverage ratio. So can that business service the proposed debt along with its existing debt? And then capital, think equity down payment. Not all loans require the same amount of down payment. If it's a conventional owner-occupied real estate note, most banks are going to require 20% down. If it's a speculative apartment complex that's not built yet, there's going to be most likely significantly more equity required in the project. Collateral, we talked about, and then conditions. When I think of conditions, I just think of other terms. What's the purpose? What industry is it in? What are we looking for in this deal? Do we want to require certain conditions? So that's kind of a catch-all. But yeah, the 5 C's of credit, it's definitely a top of mind. Some banks treat it differently than others, right? Some weigh those categories more heavily than others. But
Yeah. So I will say, anytime that you come to our office at the Small Business Administration, we're always going to say those 5 C's. And if you haven't noticed, as we talk, we say a lot of acronyms. And so I know that when I first started out in the business world, I was like, okay, wait, what is that? What is this? What does that mean? How does this? Because we will talk in that lingo very often. So one of the recurring things I heard over and over and over again was, it's going to depend on you. It's going to depend on your business, right? And so a lot of the times small businesses are like, right, but how do I know? How do I get ready? And that's where, you know, our SBA resource partners can be a true asset to you and your business, because as Wendy mentioned, when you go to her, it's not going to be, well, how much can I get? Actually, I think that's a catch-all for all of you. I don't think anybody can go to you and be like, well, how much am I eligible for, right? You're going to want to see those cash flow statements. You're going to see those financial statements. So if you don't have those, that's where our SBA resource partners can come into play and help you in being able to get your ducks in a row, all right? Get ready so that you can actually go to these lending institutions and be prepared. I always like to say, stay ready so you don't have to get ready. Why? Because those are going to be things that you're going to see consistently throughout your entrepreneurial journey. And if you don't know how to do it, that's okay. There is help out there. There are resources available to do it. You just got to ask, all right? And so we talked a lot about the 5 C's, right? One of those we had talked about earlier, which was character. I want to get a little bit more into detail about credit, all right? We see this a lot, especially after the pandemic. After the pandemic, we saw credit scores drop, right? And so for those that are looking to go to you for a loan, how can a small business owner improve their credit readiness to increase their chances of securing a loan through your institution? And so I'm not going to go my normal route. I'm just going to let you guys start.
I'll start first. So it's a good thing to know what your credit score is. There are a lot of resources online through, different credit bureaus to where you can generate a free annual credit report. That will allow you to see what your current debts are, what lingering debts you have, what can be closed out. You do want to make sure you have a consistent debt history, making your monthly payments timely. Try to avoid any charge-offs or collection trade lines, but essentially just knowing what your credit score is and keeping up with that credit report to make sure that if you aren't ready or if you do need to do some improvement with your credit, that you can follow the necessary steps in order to get you lender ready when the time fits.
Thank you, Brandi. I'm sure each one of you have some type of response for this. So, Jennifer, do you want to go next?
Yeah, I'll go next. So we look at credit a little bit differently. We don't do anything on the business side. So all of the credit that we review, because of the nature of the businesses that we serve, it is attached to the personal credit. That's the stage of business that we tend to specialize in. So very businesses that are still in a growth pattern, we'll call it that. And so we don't work with business credit at all. We do work off of your personal credit. The way that we're going to evaluate your personal credit is kind of twofold. One is an evaluation, as I mentioned, of how you have handled your obligations in the past. And we understand that bad things happen to good people, and we understand our role in the marketplace in helping people to improve your credit. Because sometimes the only way you can boost your credit is by getting additional credit, right? And so we understand our role in the marketplace and also helping people to rebuild their credit. But if you come to me and I'm reviewing your credit, the same bad thing may have happened to 2 or 3 people, but one person may say to me, well, that was my cousin's account and I don't really understand why I needed to pay for that. And yes, I signed a contract with them, but then I decided I didn't like the terms, and so I just quit paying. And then that other thing, that was a thing that I co-signed for that I didn't, I just felt like it wasn't my responsibility. But the same bad things may have happened to someone else, or the same negative information may be found on someone else's credit report. And they say, hey, listen, the reality is I took on those obligations when I was under one set of assumptions about what my income was. I got laid off. Something happened. I got ill. I got laid off. Something happened, and I wasn't able to meet those obligations. I'm now at a point where I'm rebuilding. I'm slowly repaying those obligations, as you can see, payments, settlements, things of that nature. And now I have an opportunity to grow my business that is going to allow me to get back into a financial position where I can take care of those obligations. That's a completely different story, which is why you hear the overlap between credit and character evaluation, because part of what we're looking at is how do you handle and how do you perceive those obligations that you were agreeing to when you sign a contract with someone. The other part, and I'm sorry for being a little long-winded, but the other part is, are you currently struggling with the obligations that you have? If you are currently past due, or you currently have open collections and charge-offs that are very recent, or you're currently struggling to pay your mortgage or your car note, as a responsible lender, this is not the right time to add another obligation to you, right? And I don't want to be the kind of lender that is adding an obligation that you're not going to be able to handle. And so there's a twofold evaluation when we're looking at your credit. And I think it's important for you guys to know so that when you look at it, you can evaluate it in the same way. We're probably the most flexible of in terms of looking at credit on the panel, I would say, but those are the things that we're evaluating.
Awesome, thank you so much. That's a really, yes, it is a long answer, but it is also a very necessary answer when answering this particular type of question. Stephen, Wendy, did you guys want to add anything to this question?
Yeah, just real quick, I would say going back to the 5 C's of credit, when we talk about character, these are just tips. Start a relationship with your bank today. Tenure of your relationship matters. If you come in off the street and all things else equal, you want a request for a loan. If you've got a 1 year, 5 year, 10-year history, even if it's depository only, that matters. Go into capacity, right? Your ability to repay. I would say, to the best of your ability, don't shortchange your internal accounting controls. A big challenge we see with small business owners is the bookkeeping. And so just to kind of take that a step further, if you don't cash flow on paper, at least historically, what kind of projections do you have for the business? Having a good relationship with your CPA, having a bookkeeper, taking that side of the business seriously will make it a lot easier when it comes time to access credit. And then the last thing I would say on the capital side, is don't neglect your balance sheet. And what I mean by that is retain your earnings. It's very tempting to take distributions out of the company if you've had a great year. And there might be implications with the tax man as well. And we understand that, but the stronger the business is, the more credit worthy it is. So again, don't neglect the balance sheet, retain the earnings, pay attention to that stuff because it does matter. So.
Awesome. Thank you guys so much for talking a little bit about that, because that helps us in understanding that credit side of the house when we are talking about obtaining a loan, right? And I think one of the questions that we always get, so I want to get some insight from y'all on this, is, when you go and you get your loan, you're trying to obtain a loan from any one of these institutions, what are some of the common reasons that small business loan applications are rejected? And if I'm a small business in this crowd right now, how can I avoid that pitfall? And Wendy, I'm gonna pick on you. I'm gonna start with you.
Okay, common reasons small business loans are rejected. For me, it does go back to character. Guys, think about it. You're asking a bank to give you sometimes hundreds of thousands and millions of dollars. If you email us and ask us for our time and we send you a checklist and then we have to chase you to get the information and it's scanned upside down, it's missing a page, your financials are off, you don't know how a balance sheet is supposed to look, the net income doesn't match the cash flow statement doesn't match the P&L, I am probably not going to spend more time working on your loan. It's basic stuff, guys. Review what you send us before you send it to us. Make sure that the company you're looking to buy has cash flow. Make sure you know that you have a good reason to want to buy that company, or you have a good reason to want to borrow money for equipment. Make sure you have liquidity. Make sure you're not leveraged. Have some common sense about the entire transaction and be respectful of our time. That's probably the number one reason that I just stop working on a deal. If somebody's not respectful of my time and they just don't have it together, I'm out. I have 4 words for you that you should all ingrain in your brain after you leave today. Small Business Development Center. Don't even call me unless you have talked to those guys first. You may not think they can help you. I promise you they have resources beyond your imagination. If you're looking to borrow a substantial amount of money, you need to go get your package reviewed by an SBD counselor before you come to me.
Can I just stop there right now and just be like, yes, yes, you're speaking my language. These are my acronyms. I'm here for this. SBDC, if you haven't heard about them, you need to. If you haven't heard of SCORE, you need to. If you haven't heard of one of our WBCs, which stands for Women's Business Center, you need to. If you have not heard of the VBOC, for any veterans in the room, Veterans Business Outreach Center, all of these resource partners are there in the community, ready, willing, and fully able to help you with these processes. Sorry guys, I had to. Anyone else? Brandi, Jennifer, do you guys want to add anything to this?
No, I think Wendy answered that perfectly. Just making sure that you have everything aligned with each other. You have your documentation ready. It's been reviewed. Business plan. Your mission statement is included. What your intent is, what your marketing strategies are. Having a business plan lets that lender know that you did your due diligence in knowing what your projected market is going to be and market analysis. So definitely utilize that SBDC resource and some additional resources that were mentioned as well. And I believe they are free services, if I'm not mistaken.
They are no cost, yes. Or if you like the word free better, I'll use that one. They are FREE. Not an acronym, but definitely a word we all like, right? Jennifer?
I'm going to take a slightly different route. It is true that documentation can be a challenge. One of the practices that LiftFund has as we attempt to kind of reach deeper into the communities is facilitating lending with less formality around the documentation. So that may not be as big of a challenge for us. I would say the number one reason, there's a lot of things that I can get around. I can get around credit. We can start with a smaller loan amount, help you to rebuild. I can get around collateral, like I said, be very, very flexible. I can be flexible on the equity injection and take the assets that you have purchased over the years or minimize the capital injection. What I can't get around is the cash flow. If you can't afford the debt, if I can't prove that you can afford the debt, it's not responsible of me to give you the debt. It's just not responsible of me. And so that's probably the number one thing that is the most difficult for us to get around. So when Stephen talks about not shortchanging yourself, he's saying don't write off all of your, don't write off all of your earnings. If you had a profit, show that you had a profit. Take every tax advantage that you can without crossing that line into kind of overstating or understating your profit, right? Represent your business accurately and show the true potential of your business. When he talks about protecting your balance sheet, make sure that you're actually leaving some money in your business so that money is also available for you to invest. That's going to put you in that much stronger of a financial position. So that's what I would say. The number one thing that we struggle to get around would be the ability to repay the debt or proving the ability to repay the debt.
Thank you. Stephen, do you want to add anything to this?
Not much. I would just say that the biggest reason for declination from us is incomplete loan packages, and I'm not going to go too much into the weeds. I would just say that this goes back to the internal controls and having good bookkeeping. A lot of times we'll get in situations where the documentation requirements will be intimidating. It'll be long, and sometimes if that information is not available, and you have to go back to your accountant and your CPA, or you have to sit down and make projections, that takes time. And business owners have a lot of other things on their plate, and so what ends up happening a lot of times is it just gets delayed. And I don't want to speak for the others up here, but we're under Reg B, and we have 30 days to decision an application. Otherwise, we have to auto decline it. That doesn't mean we can't, pick right back up where we left off. But we're going to have to get that information in a timely manner. And so if we sound a little sour up here about it, it's because we're under the clock too. We want to get you approved just as bad as you want to get approved. So
Thank you so much. And we do not like ending panel discussions on a sour note, so that will not be my last question, okay? I never like to end a discussion with, well, this is how you get rejected. No. The last question that we have, if you have paper and a pen, if you have notes on your phone, if you have something that you can take a note, this is the time, all right? Because you have 4 wonderful panelists up here who are about to drop some true pearls of wisdom, all right? So now is the time. So my last question for y'all, and you know it, you already know, I see all y'all's faces. You're excited about this one too. And listen, I'll give you more than one because I'm nice, all right? But if you could, what is one, I am a business owner in this crowd right now. I took time out of my day to drive here, to be here, to sit here, to listen to all of this wonderful information. What is one piece of advice that you could give me to help me as a small business owner in terms of accessing capital? And we're gonna go ahead and start far end. Brandi, you first.
Okay, I'm gonna say 2 pieces, sorry guys, but my number one thing would be to make sure you establish that relationship with a banker and understand the importance of that. The second thing would be to be open and transparent with your banker and lender, for whatever need that you have for your business. If you aren't able to get approved for financing and you need to work on, we need to get a couple of things, together prior to decisioning, it's not to discourage you and let you know that you won't be approved. It's just at this particular moment, you're not lender ready just yet. So understand that the lender, we're a team. We want to see you succeed and your business grow, but we want to make sure that you are, lender ready for when the time comes.
I love it. So I'm actually gonna switch it up. I'm gonna go to Steven next.
Okay.
You see? Surprise.
curveball. We talked about banking relationship, talked about the internal accounting. The other thing that I would add just briefly is if you receive a term sheet from a bank or a financial institution, or you receive verbal acceptance, just make sure you understand all of the terms. It's easy to get focused on interest rate and pricing. But if this is a new bank that you're dealing with, especially, make sure you understand all of the terms. And if you have a question, ask the banker. Go to your CPA, ask your attorney. Make sure you read the promissory note, the loan agreement. There's other terms in there besides the interest rate. So.
Awesome, thank you. Wendy.
So the number one tip I can give all of you, in my role now, again, we have a very rifle type approach on lending. We're an SBA lender and we focus on mergers, acquisitions, and real estate finance for existing companies. We're very busy. We're the largest SBA lender in the United States and we move so fast, it's hard to keep up. So if you're gonna be hoping to get a loan from Live Oak Bank, for us, I would say be very mindful of how you approach us. Send us an email, explain who you are, what kind of business you own, what kind of money you're looking to borrow, why, and request time. I think you need to be respectful of all of the bankers' times up here because we're juggling a million things and it's lending to portfolio management. We want to know that we're dealing with somebody that's well communicated, prepared, has clean financials, and most of all is respectful of our time, and they're going to make it easy for us to communicate and transact with you.
Love it. Jennifer?
So my perspective would be aware of what's out there, right? Don't be afraid to look for non-traditional options. Selfishly speaking, that's what I'm going to say. There are options out there for whatever stage of business you happen to be in, right? And there are also creative options for specific things that you're trying to do. So non-traditional lenders may have things like programs that are specific to veterans or programs that are specific to developing a certain community that are supported by local governments. Right now, there is a program through LiftFund for people who have been affected by the recent natural disasters at a 0% interest rate. So up to $35,000 with 3 months deferment on the payments. There's also an organization in the lobby that has some amazing interest rates. There's CDC, and I think it's the Houston Galveston Area Council or Corporation. And they have some really advantageous interest rates for businesses that are in this area. And so just be aware of the different programs and the creative solutions that may be available to you. If one institution says no, take what you can from that, learn what you can from that, continue to work with that institution, or look for an institution that fits your needs more specifically at that particular moment. We have a reverse business model where we lose all of our best customers to more traditional banks. So it's a very unhealthy business model, but that's what we do, right? So the idea is start where you are and find somebody who can support you where you are, understand the creative programs and products that are out there, understand the entire ecosystem of support that is out there for you, whether it's through the chambers or through the SBA, the SBDCs, and find an organization that can meet you where you are.
Awesome. And I would be remiss if I didn't add my own pieces of advice, all right? So I have 3 pieces of advice, all right? 2 of them are acronyms, because you know how I love acronyms. So one of them is the acronym for no, all right? It just means next opportunity, all right? So a no does not necessarily mean hard no, it's just a not yet. What do I need to do to be able to prepare for the yes, right? The next acronym that I'm going to tell everyone is a BAIL team, B-A-I-L. If you are a small business owner and you do not have one of these, you should be looking into one of these. But Liz, what is a BAIL team? It's a banker, an accountant, an insurance person, and a legal representative. It's important for you to know these facets of your business, all right? And then of course, last but certainly not least, is all the acronyms that fall under our Resource Partner Network, all right? So we have SBDC, which stands for Small Business Development Center. They've got 14 locations across Houston. So if you are located near here, Galveston County Small Business Development Center is out in the hallway as we speak. All right, we've got SCORE Houston, which stands for Service Corp of Retired Executives. Not all of them are retired, but one of the pieces of advice I always like to give small businesses is use other people's knowledge. And that's what those mentors are. They've been there, they've done it, they probably have some type of certificate to let you know that they've done it. Also, we have 2 women's business centers, and we have a veterans business outreach center as well. So all of these resources are available to you. So if you don't know where to start, I just told you where to start, all right? And if you're like me and you're a visual person, the Small Business Administration also has a table outside in the hallway, and guess what? I'll be more than happy to show you how to find all of those resources at your fingertips, all right? Including a list of all of our local SBA Houston District Office SBA guaranteed lenders, which all of these are on, all right? So, we got a little bit of time. I see a wonderful mic here in the middle. So now it's time, I know, listen, I have been up here for almost an hour, and I know you are tired of hearing my voice, so let's hear yours. If you have questions, we may have answers, right?
Hi, my name is Shaz. I run the business Valley Clean Pressure Washing, and I wanted to ask, what are some of the mistakes that can lead to failures during the lifetime of a loan? Like maybe closer to the end of the loan, or maybe beginning or middle. What are some things that can screw someone over?
Anybody want to start? I see Jennifer
I'll
ready.
start, yeah.
Jennifer's ready to go to this one.
The best laid plans of mice and men, right? So we have a plan for what cash flow is going to look like, but oftentimes there are extenuating circumstances like hurricanes or major construction comes through my area and closes off the street in front of my restaurant, or somebody steals my air conditioning and rips all the copper out of my building. I don't know, but things happen, right? Major illnesses, unforeseen circumstances. And the best defense that we have against those unforeseen circumstances is planning for unforeseen circumstances, even though they don't have a name. But it goes back to what Stephen was saying about leaving some reserve in your business, right? Don't bleed your business dry. We made $1,000 profit, we're taking $1,000 home. We made $1 million profit, we're taking $1 million home. Leave some reserve in your business to be able to weather those storms, because the storms are going to come. Physical storms, real storms, or other kinds of storms. There are going to be unforeseen circumstances in the lifetime of a loan. Whether the term of the loan is 5 years or 30 years, I mean, some of the loans that we're talking about are very long-term commitments. Something's going to come up in that amount of time. You're not going to go that long without a surprise. So plan for those things accordingly would be my advice.
Awesome, thank you. Does anybody else want to add anything before we move on? Awesome. All right, next question.
Hi, my name is Devin DePascal. I'm the executive director of the Hitchcock EDC. And so I'm not a small business owner, but we are kind of the first point of contact for potential entrepreneurs and small business owners. And so I guess the question I have is, as an EDO or as a city employee, what can I do to kind of help streamline the process and kind of help create a pipeline for our entrepreneurs to go from an idea to an actual product, in a way that kind of streamlines the process, makes it easier for everybody, and doesn't put a burden on you guys. For me to send y'all 3 dreamers a day. And
Thank you. Wendy, you want to start?
I'm not in the space too much anymore, but I used to be. So
We'll take all the pearls of wisdom.
Okay. I used to deal with you guys a lot with the EDCs, and I can't tell you enough that your first phone call really does need to be the Small Business Development Center. You need to call Amy and you need to say, I got a guy, he wants to lease a space, this is what he wants to do. Is it viable? Let her pull some virtual IQ. She's going to call 4 or 5 different banks and put some feelers out, and then she'll get back to you in a few days and say, don't pay any more attention to it, or send them my way and I'll handle it for you.
Yeah, and I just want to add to that, small business development centers do have access to industry reports that can help them in being able to understand if your dream can actually be turned into a reality. And I always like to say that our resource partners can turn dreams into plans, business plans. All right, we're going to move on because we have very limited time. So next question.
Hello guys, my name is Alfred Bedford. My question is, I've heard you guys talk about loans. What about grants? Do you guys have availability to grants? Or is there any grants? How one can seek a grant? And also with the loans that you guys talk about it, you guys didn't give at least the limited, like the minimum interest rate to the highest interest rate. You didn't give an average estimate of that. If you guys can highlight more on that.
Awesome, thank you so much. We got to be quick. So Brandi, go for it.
Okay, so in terms of grant funding, ACU, we do not do grant lending, but I do know that you can utilize online resources to find, I know that there are some small businesses that do deal with grant funding, and they especially assist with, minority business owners, women, and so forth. So I would definitely recommend you to look online to see what small business opportunities may be available for you as far as grant funding goes. In terms of the interest rate, that's going to be a little difficult to say because the interest rate is going to be contingent on what type of loan product that you're interested in addition to the market.
Awesome, and I'll just piggy off of the grant question. The Small Business Administration does not have grants to start or grow businesses. That is one of the #1 questions that we get very often. And what I will say is that most often when there is a grant available, that grant is for a very specific purpose, AKA I need to upskill an employee, then there may be grants available through that. Texas Workforce Commission may be something to look into as well. Next question, I recognize you.
So Wendy had a comment about SBA is not bulletproof, that you know, if you don't have collateral, you don't have equity, you don't have cash flow, it doesn't necessarily mean it's going to work. But I wanted to share this, audience. The why for SBA is the guarantee. And I do want to clarify, SBA cannot decline you solely on collateral. I wanted to qualify that. Wow. But it can contribute to the denial if there are other factors that could impact the application. So I wanted to clarify that. Two, Wendy also shared about boots to business. Do we have any veterans in the room? Yes. Please stand. Yeah, please stand. So veterans, thank you for your service. Wendy mentioned about Boots to Business. We have a Boots to Business reboot coming up July 31st. So just wanted to make those comments. Thank you very much.
July 31st, Houston Spaceport. District Director of the Small Business Administration, your local office, District Director. This is our last question. Make it a good one.
Not on the hot seat. Dave Weaver, small business owner, also president of the Houston Regional Veterans Chamber. It's a great panel, thank you. But this is a question for all small businesses. Is building business credit? What are some of the things that you are seeing to help not just veterans, but all small businesses to build their business credit? Because I know there are some lending institutions and there are some ways to build business credit so you can actually take it away from your personal credit and actually do it on the collateral of the business. Not just, and I know character is still important and still a factor, but, and I know there are some lending institutions that don't necessarily report to the three big credit unions that you actually pull from. So how can a small business build that business credit? Because when they're starting out or when they're small, $500,000, $1 million, they're still trying to build that business credit. How do they do that?
We got time for one answer.
I really think she would have a better answer than I would, but that's a complex question. Some institutions pull what's called a Dun & Bradstreet report, which is your business credit report, and unless you reach a certain level and you're dealing with certain vendors, you're not really going to have much for us to look at on a D&B. Business credit, in other words, where, let's just say, like my husband owns a document storage company. All of our vans, unfortunately, are on our personal credit report. Because of the way that rates are and banking is, our business itself doesn't show that it had much credit because I don't deal with vendors that issue us credit. And our equipment is on our personal credit report. So for me, business credit means, does my business bank know how long I've been in business? Have I been providing them with accurate financial reporting? Because once you get a loan from a bank, you're going to have to report annual financials every year anyway. And how long have they been dealing with us? How long have we been in business? So I think some of that comes with time, but understand personal guarantees are required on every loan you have. So it's going to fall back on your personal credit unless you get to a point where your top line revenues start to exceed 25 million. Then you get to start dealing with the banks that don't want personal guarantees because your corporation stands on its own feet. So to build business credit, time in business, profitability in all periods, accurate financial reporting, and then maintaining your own good personal credit score.
Awesome. Thank you so much. Can we get a round of applause for all of our wonderful panels? We are out of time. I agree that this was an amazing